So a quick recap of what has happened with markets so far. Certainly what we have seen with US market is that it continues to show resilience, and the market is seeing that present dip we have had last week as a good opportunity to buy into the markets with week-to-date gains seen on most US indices. And indeed, I would say that given the fact that the political diversion, the attention on President Donald Trump and his Russian ties due to see only more developments next week with him being on trip currently, has given markets some sort of river of relief. But another developing story that we have certainly seen is that rally in crude oil prices. So WTI futures itself have briefly tested the $51.80 resistance that we have seen of late, and I think that is a strong trend. So besides the underlying trend with the expectations that the OPEC members would actually cut their would actually extend the supply cut in the meeting on Thursday, the market itself have also seen the private API report of US crude inventories declining 1.5 million barrels, and I think that bodes really well for the Department of Energy report that is going to be due today. So as things stand, we are going to see the prices itself probably remaining on this uptrend, but a break of the $51.80 resistance is going to be key, and ahead of that we might see prices going back into the $51.50 to $54.50 sideward channel that we have seen prior to that significant dip in crude oil prices. And last but not least, I think what we have had a very interesting breaking story today was Moody's actually downgraded China's outlook to A1 from AA3. And for the markets, although A1 itself is not a very significant decline in terms of ratings for the country, for the markets itself, it had actually been creating some concerns as Moody's actually drew some attention to the rising debt and possible slowing in terms of economic growth. So areas of the Asian markets have largely remained resilient today, but we are seeing some pressure for China's market, specifically when I last checked, the CSI 300 have been down about 0.8%, and I think that's going to be a theme that might carry forth for the rest of this week. So a quick look at what is going to happen next week. Indeed, as what I've mentioned in my week ahead video last Friday, a lot of the high level attention is going to be focused on the later part of this week. So today we have the Fed FOMC minutes coming through, and I think the theme for the US dollar could be one on the upside. Specifically overnight, we have already seen the US dollar tick up in anticipation of the minutes itself. And in addition to that, Thursday, the OPEC meeting itself is something that we have been anticipating for a while. And last but not least, Q1 GDP second reading from the US is another item to look ahead to. So as things stand, the market itself, as I have mentioned earlier, is expecting 0.9% quarter-on-quarter annualized uptick from the 0.7% first reading. And I think for the markets, there is an upside for the US dollar this week. And looking back to the Asian region, I think for the local Singapore market, Thursday's Singapore Q1 GDP is another item to look forward to. So as things stand, the local Straits Times Index or the related Singapore index that you can trade on IG had largely been thriving around the 3220 levels, but should we see a significant revision on the upside for Q1 GDP, I think that's going to lift the optimism for markets here in Singapore.